If you want to understand how to never lose money, you must begin by accepting a truth that most people avoid. Losing money doesn't come from bad luck. It comes from bad thinking, emotional weakness, ignorance of basic principles, and a lifetime of repeating the same mistakes while expecting a different outcome. I, Charlie Munger, have spent nearly a century watching intelligent men do foolish things, and I've learned that the real secret to building wealth isn't brilliance, talent, or luck. It's the disciplined avoidance of stupidity, because stupidity is far more common, far more dangerous, and far more costly than most people believe. The first and most important rule is simple: don't lose money. But humans are emotional animals, and emotions destroy capital faster than any recession or stock market crash ever could. People panic when prices fall, get euphoric when prices rise, speculate when bored, follow crowds when confused, and chase short-term excitement instead of long-term results. So the first step to never losing money is to cure yourself of these psychological diseases. You do that by constantly inverting your thinking, asking not how to win, but how to avoid losing, because problems become easier when you approach them backward. Most investors fail because they confuse volatility with risk. They think a temporary price drop means danger, when in reality, the only true danger is owning something you don't understand or something built on weak foundations. Volatility is simply the market transferring wealth from the impatient to the patient. If you react emotionally to price swings, you're not investing. You're gambling with a loaded gun pointed at your own future. To never lose money, you must stay inside your circle of competence. That means clearly defining what you understand, staying away from what you don't, and acknowledging ignorance without shame. Because ignorance is forgivable, but pretending to know what you don't is a guaranteed way to destroy wealth. If you can't explain how a business makes money in one or two sentences, you have no business buying it, and no amount of intelligence will save you from that error. And while we're at it, avoid leverage, unless you're eager to learn the fastest way a smart man can go broke. Because leverage gives you the illusion of brilliance on the way up and a one-way ticket to disaster on the way down. Liquor, ladies, and leverage, the old saying goes, are the three things that consistently bankrupt competent men, and only the last one does it to the sober and rational. Never forget that. The path to never losing money also goes through emotional discipline. Your brain is wired with cognitive errors, confirmation bias, envy, overconfidence, FOMO, loss aversion. And if you don't learn to override these impulses, you will behave like every other fool who thinks he's special while acting exactly like the crowd he secretly imitates. Most financial misfortune comes not from markets, but from human nature. You must discipline your mind to think independently, rationally, and long-term, even when everyone else is noisy, panicked, and irrational. Great investing is boring. It's about patience, waiting, understanding the business, and letting compounding work over decades. The big money is not made in the buying or the selling, but in the waiting while your capital quietly multiplies behind the scenes. But most people cannot wait. They are addicted to motion, addicted to action, addicted to the illusion that doing something is better than doing nothing. So they trade constantly, chase trends, follow hype, believe predictions, and pretend that they can outsmart markets powered by millions of participants, all while failing to outsmart themselves. A disciplined investor builds checklists the way pilots do, systematically reducing the chance of catastrophic error. Do I understand the business? Does it have durable competitive advantages? Are the managers honest and competent? Is the valuation reasonable? Can I hold this for 10 years? What are the biggest risks? What would make this fail? And perhaps most importantly, what am I overlooking because I want this investment to work? A checklist protects you from your own biases, because the biggest risk in your portfolio is not the stock market. It is you. It is also necessary to avoid toxic people and toxic environments because stupidity is contagious. If you surround yourself with speculators, gamblers, hype-driven friends, dishonest partners, and people addicted to excitement and shortcuts, you will eventually imitate them and pay for their dysfunction with your money. Partnerships matter, and integrity is a financial asset. Protect it fiercely. And do not forget that the world is full of people playing 10-minute games, reacting to every headline, every rumor, every price movement. But wealth is built by people playing 10-year and 20-year games. People who think in decades rather than days. People who choose the long-term compounding of rational behavior over the short-term thrill of speculation. Wealth is built by focusing on a few great businesses, held for long periods, bought at fair prices, backed by strong fundamentals, run by competent managers, and protected by durable competitive advantages. And while everyone else wastes their life predicting recessions, timing markets, guessing interest rates, and following the noise, the rational investor ignores macro predictions, focuses on micro truths, and quietly compounds wealth while the noisy ones exhaust themselves. If you want to avoid losing money forever, commit to these principles. Avoid stupidity before seeking brilliance. Stay within your circle of competence. Be patient when others panic. Avoid leverage like poison. Control your emotions even when they betray you. And commit to the long game even when the world worships the short one. Understand that the world rewards those who remain rational for longer than others can remain impulsive. And if you simply make fewer mistakes than the average person, you will outperform the vast majority without needing genius-level intelligence. The secret is not to be extraordinary, it is to avoid being foolish. Remember that a simple idea, taken seriously, can make you rich, while a complicated idea, taken emotionally, can bankrupt you. So take these rules seriously, apply them consistently, and make them the foundation of your investing life. Because in the end, wealth is not built by chasing extraordinary returns. It is built by avoiding catastrophic losses. And the man who avoids losing money, year after year, decade after decade, doesn't need miracles, predictions, or luck. He just needs discipline, rationality, and the humility to accept that avoiding stupidity is the smartest strategy of all. This is how you never lose money. This is how you build a life of compounding wealth. This is how you win, not by being brilliant, but by refusing to be foolish.